Hi, Michelleoddo here with the Oddo Group at Leader One Financial. And people ask me all the time, how are credit scores created? Like what makes up a credit score? So there are three different types of scores. There's your Experian, your Equifax, and your TransUnion. And they're all separate companies. They all are repositories where companies like your bank, your car, where your car loan is, your credit cards, they report to those three different repositories. And what happens is each one of them, Experian, Equifax, TransUnion, they have their own formula for how they come up with a score. So they have some rules that they have to follow per Fannie Mae to get, a FICO score, but it still has its own little twist on it. And I always say, think about like Coke and Pepsi. They're both soda, they almost taste the same, but they each have their own little proprietary formula and nobody really knows what's behind the scenes there. So that's the same thing as Experian, Equifax, and TransUnion. That's one reason why sometimes all three scores might be different. They each have a slightly different formula for how they're coming up with your score. So what makes up a credit score? Well, it has to do with what accounts you have on your credit. So how many accounts and what types of accounts? Do you have a lot of credit cards? Do you have installment loans? Do you have a mortgage? All of those things make up a mix, kind of like a stew or a soup with a bunch of ingredients in it. All those different things at different levels are worth points. So, how many accounts do you have? What are the balances? A big deal, something that really will affect your score is whatever the high limit on a credit card is versus the balance. So they say try to keep your balance about 30% of the limit or lower for an optimal score. And even lower than that is great. One thing is sometimes people think if they pay everything off and close accounts, that will help their credit. It actually will hurt your credit. So if you have an account that you've had a long time and you've had a good payment history on it, just pay it off or pay it down, but don't close it or you'll lose that history. And that's not good for your score. A perfect mix is, a few revolving, a couple installment, maybe a mortgage, low balances versus the limit, and a decent amount of time in the bureau. However, sometimes young, college kids, they come out of high school and they want to build a score. They have no credit score, and really just opening one or two accounts, even if it has a $300 or $400 limit, charge a little bit of gas on there or groceries and pay it down to $25 a month. You're going to have a great credit score after doing that for several months. So really, again, the credit score varies. It really depends on all of the things in the bureau, your time in the bureau, and of course, late pays, collections, charge-offs, liens, all those things definitely affect your credit score. It can really hurt your credit score. Even if you've had great credit forever and all of a sudden you have a medical collection, that can really drop your credit score. Scores can range anywhere from the 500s to the 800s, typically. That's what we see. And right now, it's really hard to get a loan with anything under a 620 credit score. That's kind of the threshold we're all looking for in terms of minimum credit score. And that's really post-COVID. Prior to that, we were doing 500 and 580 credit scores. So really, that's kind of the optimal score is anything above 620, a nice score to get a good credit, good rating, and get a good rate is in the 700 range. And of course, up into the 800s is even better and will get you the best program out there. In terms of the credit, obviously your income and assets are another piece to the puzzle, but we're just talking credit right now. So it's good to just watch. You can, on Free Credit Report or whatever, you can get copies of your credit report. That score is not going to match what a lender would pull. We have a different, formula we have to follow per Fannie Mae's guidelines. But it should be close in terms of what's on your credit. Like, do things look like they're being paid on time? Are there any collections you didn't know about? Things like that. So if you have any more questions about credit and credit score, Michelleoddo with the Oddo Group at Leader One Financial, we'd love to help you. We are an expert in credit, reviewing credit and helping people clean up credit issues that they want to get rid of and get on the road to a clean and good credit report. Michelleoddo, the Oddo Group, Leader One Financial.